Bitcoin has been reaching fresh highs for 2 weeks, reaching a peak of more than $73,600. And then starting last week, Bitcoin started to drop. So I'm wondering, what do you think is behind this sell-off, and how much of it is attributed to profit taking and the heavy outflows from the Grayscale Bitcoin Trust?
I think it's important to look at the big picture. And Bitcoin's up 47% year to date. Put that in perspective, the S&P is up 7.5%. Ethereum, which doesn't have the ETF bump, is up 37.5% today. So I think these outflows, or the decrease in price, which is pretty well telegraphed, are more to do with the macro environment rather than anything specific to Bitcoin or the ETF right now. I mean, this has been a staggered step down from 73 into the sort of mid 60s. I think it's a normal retracement, but nothing significant. And I fully expect that the price increase will continue to go from here.
So you think Bitcoin will continue to rise? Do you think we'll see more fresh highs? And if so, what are the factors that will contribute to that?
So I think for Bitcoin alone, that's inevitable. If you look at, this is very early stages for the institutionalization of the asset class. And I think it's important we look at it as an asset class rather than just this one product, which is the Bitcoin ETF. So unlike 2021, you're seeing this rise driven by institutions and true supply and demand. Remember, right now, today, before May 20th, only 900 Bitcoin are mined freshly every single day. That's roughly $60–70 million. You're seeing inflows into the ETF up to $1 billion a day. So purely on a supply and demand basis, you should see this price rally. Now, we're not necessarily Bitcoin or crypto evangelists, but I think on that basis, when you see the likes of BlackRock entering the space and allocating parts of their portfolio to crypto, you can only see the price going up. There's only ever going to be 21 million Bitcoin out there. So if 3% of the world's assets go to crypto, that would be a $6 trillion asset class. Today, it's worth $2–2.5 trillion. So yeah, you should expect most crypto prices to go north from here. And I think, obviously Ethereum and Solana will follow.
Now, I want to point to something you said earlier this week. You believe the market will not be permanently augmented by the spot Bitcoin ETFs, and that the real money capital must come into the space to support and strengthen the market. How do you think that can be achieved?
I think what you're seeing with the ETF is just one signpost in what I believe is the fourth or fifth industrial revolution. So, greater minds than me have talked about the tokenization of capital markets. This is the first step. Crypto is just the proof of concept. You're going to see tokenization of a lot of TradFi assets. So, the steps you talk about were, one, institutions really buying the asset class or accepting for the first time in history that they're storing digital assets or digital property. That's never happened before. Now, whether that token or that digitization is Bitcoin or an S&P stock share is kind of irrelevant. The predictions that we have from all the research houses out there is that the tokenized economy is going to be $20 trillion by 2030. Even that's not so much. That's 10% of all the TradFi assets that exist today. So I think for me, it's just a signpost to the future and the future of capital markets that we'll be lucky enough to live through and enjoy.
Now, I want to mention the upcoming key technical events, the Bitcoin halving, which is expected to take place April 19th. And typically, in the run-up to those events, Bitcoin's price increases. So do you think that's playing into what's happening with Bitcoin right now?
Not so much. I think it's priced in. I mean, the evangelists out there will tell you, 2012, 2016, 2020, the halving preempted a bull run. I think that's priced in now, if I'm honest. But undoubtedly, there'll be a change, and miners already are trying to become more efficient. But I think for now, on this occasion, with the weight of money that's coming in, it might be less of an effect than you've seen previously. I think that the thing that drives most of this is actually the credibility lent to the market by large institutions, household institutions, finally owning and offering this asset class.
Now, earlier this week, a Standard Chartered analyst raised his year-end forecast for the price of Bitcoin to $150,000 from $100,000. Do you think that's a realistic price target?
He's a braver man than me. What I would say is based purely on supply and demand. We've never seen the likes of this before. If you go to that portfolio approach, 3%, 5% of people's portfolios or the assets in the world being allocated to Bitcoin, then you should see the price of Bitcoin alone being multiples of what it is today. I'm not in the business of predicting. Typically at LMAX Group, we match buyers and sellers. But I do think in a longer time horizon, 5 years, 10 years, then certainly this will be trading in 6 digits rather than 5 digits as it is today.
It certainly will be interesting to see if that forecast comes to fruition. But as you touched on, billions of dollars have poured into spot Bitcoin ETFs since launching in January, and that's including the heavy outflows from the Grayscale Bitcoin Trust. Now, LMAX Digital, your institutional crypto exchange, facilitates trades for about 10% of the spot Bitcoin market and processes roughly $2.5 billion of trades daily for institutional clients. So I'm curious to get your take on how these recent developments, like the approval of spot Bitcoin ETFs here in the US, how that plays into institutional appetite for crypto right now.
So I think if you look at all the institutions we cover, so within the group, we trade with 35 of the world's top 40 banks, all the major proprietary trading firms in the world, over 200 brokers. Now, the group that were excluded historically have been the banks. They could trade the future, but they couldn't trade the physical. What you're seeing now is the underlying for these ETFs is the physical. So whilst we're not an ETF provider, right, the ETFs have to buy those assets, being Bitcoin. So we're the recipient of that. So I think overall, this democratizes the asset class for everyone. It opens up market access from retail all the way up to institutional. It means that even the high net worth desks, the private wealth desks in banks can now offer product which gives you direct exposure to the asset class. For us, at LMAX Digital, that's just the start. I think over time, as all the institutions become more comfortable with the behavior of the asset class, you're going to see people getting closer to the asset itself and owning the core asset, which is Bitcoin or Ethereum or Solana.
Now, several asset managers here in the U.S., including BlackRock, VanEck, ARK, and Grayscale, have applications pending with the SEC for spot Ether ETFs. So I'm curious, what do you think will happen there? Do you think they will get approved? And if they do, how will that impact institutional interest in Ether specifically?
So the interest is there in Ethereum. If you want to look at it simply, Bitcoin's the store of value potentially, where the gold of the crypto market, Ethereum's the utility, the oil of the crypto market. So
interesting.
Even the difference in the price action this year, I'd say Bitcoin up 47%, Ethereum only up 37%. That difference is probably because of the ETF approval, right? So the crypto wave has taken all of crypto higher, but Ethereum and Solana aren't yet at their all-time highs, which still date back to November 2021. The Bitcoin all-time high was set recently, which took out the November all-time high. So I just think the ETF approval, which will happen, I I can't predict if it's going to happen. I'm not in the United States. I can't predict if it's going to happen in Q2 or Q3. But I think it's inevitable that it will be approved. And the names you mentioned, they're not in the business of applying and being rejected too often. So I think it'll be approved. I think that's great for Ethereum. I think that's great for the utility of the crypto asset class. And I think it's also great for everyone in the decentralized economy right now who wants to engage with those assets and those tokens.
Sticking with Ethereum, the network just finalized its latest big upgrade, Denkun, last week. So I'm wondering, how has that changed the dynamics, and has that also increased institutional appetite for crypto, specifically Ether, or interest in Ethereum? And obviously this upgrade was meant to help with scalability, so did you see a change since that upgrade went live?
It's too early to tell in terms of flows or activity, but the transaction costs are now a fraction of what they were just a week ago. So that is usually positive for Ethereum and the Ethereum ecosystem and all ERC20 tokens. I mean, whilst we could talk about sort of DeFi and distributed finance, it was actually quite expensive. It was becoming quite expensive. Gas fees were expensive to transact on those decentralized apps. Now on the layer twos, it's becoming, single digit cents on the dollar rather than double digit or sometimes over $1 per transaction. So I think that's going to help the growth of that utility and overall everything that works within the decentralized or tokenized economy.
Why do you think Bitcoin, layer 2s, and Ethereum protocols are going to be significant drivers of a new wave of interest in digital currencies over the long term?
If you look at Ethereum particularly, and that whole blockchain, if you imagine the future of capital markets is going to be tokenized, right? You hear Mr. Fink from BlackRock saying that. So it's, if you like, all I've ever done in 30 years in capital markets is try and increase market access. So, 7, 8 billion people in the world who are financially enabled, providing those people market access to trade even fractional amounts of an asset. So we don't have to have these minimum sizes of trade anymore. So I think that's really the empowerment that comes through Ethereum, ERC20, but likewise with Solana, which is probably the fastest blockchain right now in terms of transactions per second. So I think that empowers the whole growth of the future economy going forward. And whether you build it on Ethereum or a permission blockchain that might stem from Ethereum in the first place is again, the proof of concept for what the world's going to become. I honestly think we're at the start of something very, very exciting, and that in the next 15, 20 years, most of capital markets will be tokenized, and most of the record keeping, settlement, payment, reconciliation will be on blockchain. And the oft talked about instantaneous transfer of ownership will be a reality. So that's the empowerment you're going to get from Ethereum and these layer 2s right now.
You're here in New York City right now, but you're based in the UK, and you recently wrote a piece talking about why you think London is becoming a crypto hub. So can you take us through some of the key points? Why do you think London is in fact emerging as a crypto hub?
Technology and taxation are part of it. I think the regulatory framework is helpful. We have a slightly different approach in the United Kingdom and Europe to the US. So the US starts from a standpoint of classifying the asset. The UK in particular, and also Europe under MiFID II, classifies the activity. So the current thinking in the UK and Europe is that we will try and fit this asset class into existing regulation, be that for arranging, advising, or executing on a product. The United States is stuck a little bit right now in terms of classifying things between securities and commodities. So I think there's an opportunity, speaking as someone who runs a global company, it's an opportunity for Europe to lead, for Asia to lead. But let me make let's make no mistake about it, 50% of the world's assets sit in US custody banks. The world needs the US to be a part of this revolution, and I'm convinced they will be. It might just take a bit longer than everyone wants or hopes. But right now, if you're sitting in the UK, and you're a regulator or a government, you have an opportunity to lead.
Where do you think the U.S. stands as it pertains to crypto regulation and compared to other places in the world, including the UK? And is it too late for the U.S. to catch up to other regions in the world as it pertains to crypto regulation?
It's absolutely not too late for the United States of America. I mean, follow the thread of capital. It comes here. Crypto is still 1.5% of the world's assets, so they have time to get it right. The Securities Act, the Banking Act over here have lasted for 90 years. When they get it right, they'll get it right, and it will stand the test of time. As I say, you just look around you, you have all the institutions here. Now, unlike the UK and Europe, it can be a little bit politicized over here, and I'm no political expert, so let's see what happens with the election. It would appear at the moment that one side is potentially more crypto-friendly than the other, but I think irrespective of that, you're gonna have a crypto framework, a stablecoin framework, a tokenized framework within the next 5 to 7 years. So whether it's in the next session or the next presidential term, it will happen. And I think the United States will be at the center of the new tokenized economy going forward.
What can people expect from LMAX Group this year?
I think the key thing for LMAX Digital and LMAX Group is to retain and expand on our relevance to the customers. So we must come up with solutions for all the customers I've just mentioned. So be they the real money segment, the asset managers, the banks, the proprietary trading firms, or the brokers, we must be relevant, and that comes by finding solutions for what they want to achieve today. And what they want to achieve today might be different in 2024 than it was in 2018 when we launched LMAX Digital. So it's that we're looking at product and technology diversification, greater distribution globally. We have clients in 100 countries, so it's taking this product, which we think is centralized in Europe and the US right now, and taking that out to the world, because I believe that the world will have less friction in it with regards to capital markets going forward, down to the tokenization of the economy. So watch this space, but I'd be very surprised if we haven't got a big part to play in the future.
David Mercer, CEO of LMAX Group, thank you very much for joining us on Crypto World.
Thank you. Thanks for having me.